Welcome back to the YouTube channel. Today I'm giving my insight as a chartered tax advisor on ways that you can reduce your tax bill, how you can pay less in tax, the kind of planning that we do when we do this with clients as part of our tax strategy side of the business, what the process is we go through in order to help people just like yourselves pay the least in tax as possible and maximize their wealth. But before we get things started, I've got a favor to ask you guys. If you could make sure that you hit that subscribe button so you get notified as soon as you post new videos, and also give this video a big thumbs up and share it with anybody who you might think wants to pay less in tax. The first place to start really is when we're working with clients, we basically run through what their business goals are and their lifestyle goals. Their lifestyle goals are obviously the most important thing because this is why most people start businesses, is so they've got income and wealth to do what they want to do in life. So this is the first thing that we run through when talking to clients. The reason for this is because it flows into the second thing, which is the business structure. When it comes to paying taxes, your business structure is pretty much the biggest factor when it comes to the amount of taxes you pay. And so often we see it where we've got clients that have come to us that are quite simply in the wrong structure, and as a result, they're paying too much in tax. They might have the wrong kind of group structure, they might be in their own name, LLP, hybrid, whatever the actual solution is to their situation, they're in the wrong structure, and as a result, they're overpaying tax. It's pretty easy to get right if you're working with a specialist, but it's pretty easy to get wrong if you're not getting that kind of advice. So that's the first thing that's the first 2 points to run through rather, is look at where you want to get to and look at how you're going to get there. Number 3 is we're looking at actually the ongoing side of the business. So we know where we want to get to and how we're going to get there, whereas actually, what are we going to be doing along the way? So the first thing we're looking at is maximising deductions in your company. So when it comes to tax, especially assuming that you're in a limited company, the biggest factor on the amount of corporation tax you pay is obviously your taxable profits, because that's what's subject to tax. So the more expenses that you can put through your business that are tax deductible, the lower your tax bill will be. So you need to look at how to maximize this for your business. We've got lots of different videos on this on the YouTube, and we've got guides as well on our TaxSmart program as to how you can maximize the deductions that you're putting through your business. But some examples could be, company cars, pension contributions, salaries, and whatnot. And there's so much more. Renting your home to your company. And so we don't have time to go through them all today, but make sure that you're putting some effort into learning all of the different expenses that you can put through your business, because this is a massive factor in terms of boosting your cash flow, which then either gives you more money to enjoy more life or more money to put aside to invest and build that long-term wealth. So learn what you can put through the books, how to maximize it so that you can minimize your corporation tax bill and your profits on a yearly basis. And then of course, with your business as well, you're going to want to take money, cash out of the business to pay for your personal living expenses, to pay for houses, to pay for holidays. You need to make sure that at least once a year, you're having a meeting with your tax strategist, your chartered tax advisor, to run through the most tax efficient way of doing this. As we know, tax rates change each and every year. So do your personal circumstances, so do your business objectives. So naturally, all of this needs to... I hope you're enjoying the video so far. I did just want to have a quick pause here to let everybody watching this video know that our accountancy firm at JSM Partners are currently taking on new clients. So if you need guidance when it comes to bookkeeping, payroll, year-end accounts, VAT returns, the whole lot, my team are on hand to help you with this. If you would like to book a free discovery call, which is where one of the sales team will run through your circumstances and create a bespoke package for you, about to give you a quote so you can start working with the best. All you need to do is click that link in the comments below, book your free discovery call to see how you can start working with JSM Partners today to feed into how much money you're taking out of your business. Obviously, for a lot of people, the core components of this are basically is your mix of dividends, interest, salary. They're the main ones. And of course, as you've seen, in terms of maximising every expenditure, putting business, entertaining through, trying to find a way to put that through, business travel. So can you turn a holiday into a business trip? We talk all about this in the TaxSmart program. But basically, can you find ways for the company to pay for your personal lifestyle? That's obviously a massive win, but of course, there's only so much you can put through. So actually, anything else you take out, how can you do this in the most tax efficient way? It's absolutely a point that you need to have addressed. If you're looking at just taking out £50,000 a year, you're probably looking at salary and interest, salary payments if you can, probably the 12,570. If you've got a director's loan account, probably interest payments, and then dividends on anything over the top. But of course, that depends on your personal circumstances, so definitely get specialist advice on that. Another factor to take into account is reinvestment. So a lot of us run our business cash flow positive, and you want to build long-term wealth. Ultimately, it might be stocks and shares investment, might be crypto, but for a lot of people, it's real estate, myself included, simply because you can't really go too wrong. And ultimately, real estate is an in-demand asset, pretty much always appreciated, and it's cash flowing. So you can get this cash flowing pot now where you're probably exchanging your time for the money, put that into property, which can be more passive and is going to increase in value and continue generating cash flow. So you need to look at, for one, where you want to get to, and then look at how you can reinvest tax efficiently. We've had people come to us before where they had bad advice that they couldn't do any loans, or they couldn't have a group structure. Their accountant hadn't told them about that, their tax advisor. So actually they were pulling out all of the money personally, paying income tax on that, pretty much losing half of their money to the tax man, and then they were reinvesting it into a limited company. Quite often, this is the case. You need to know that, well, probably you want to keep it in that company. Unless you're a basic rate taxpayer, there's a reason for pulling it out. If you don't need the money, it quite often makes sense just to leave it in the company, because income tax is probably the highest tax for a lot of people watching this video. Yeah, you pay corporation tax, 19, 25 or 26.5%. We've got other videos covering that in more detail on the channel, but it's the income tax that really gets you, whether it's 20, 40, 45%, 8.75, 33.7, and so on. These rates are much more significant and are much more destructive when it comes to your objecting of building long-term wealth. So if you don't need it, leave it in the company. The main reason for that is that you can then move it across to another company, another SPV for property investment or stocks and shares investment potentially, without paying any tax on it. So that's the kind of things that you need to have this plan in place. You need to speak to somebody who knows about this stuff so that you can have your plan made, so you know what you're doing in your business, why, and how it's helping you build wealth. So we do this kind of stuff for clients all of the time, is run through all of these steps to get your tailored plan in place so that you have clarity as to what you're doing and where you're going in your business. So I hope this video was useful. Just some key points in terms of what to look for when it comes to reducing your taxes. This is what we do as chartered tax advisors, tax and wealth strategists, is basically running through this for your personal circumstances. But there's definitely lots of key points there. And essentially, you can do your own homework on all of those key points. You've got loads of other videos on the channel as well in terms of business expenses, different basically business vehicles and structures. So there's more information there. But for everybody watching this, if you do want to book a consultation or join the TaxSmart program, you can reach out to me, Joshua, at joshuatharby.com. We are currently open for new members, so do let me know. Otherwise, thanks for watching, guys, and make sure you do give this video a thumbs up and hit the subscribe button.